My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain, but to educate, teach, context. Call me, 1-800-743-CNBC. Tweet me at Jim Cramer. I have a very simple rule of thumb here in Cramerica. Always go for the easy money, not the hard money, no matter how much you might be tempted otherwise. Netflix today, after that disappointing quarter, just became the hard money. On a day where the averages seesawed in response to earnings and, of course, to some Fed comments, with the Dow inching up 3 points, S&P gaining 0.36%, NASDAQ advancing 0.27%, you need to understand how a stock can go from easy to hard. And now the pin action from that particular move can rightly or wrongly impact a host of other names as portfolio managers try to wrestle with a consistent company that has suddenly become erratic. And that, ladies and gentlemen, is Netflix. Look, we all know the story. Most of us love using Netflix. It's the ultimate cord-cutting play. They license lots of older programming to bring you in and then add in their own homemade brilliance to keep you hooked. Because they know what people want to watch, artificial intelligence, they can make some truly great stuff, like Stranger Things. The latest season hasn't even been out for a month, and already it's been watched by 40 million households. However, last night Netflix reported some truly heinous numbers. This has always been a subscriber growth story, but this time they didn't grow subscribers here in the U.S. They actually lost. That's the first time they've lost subs in the U.S. since 2011. Earnings are down year over year. Even international couldn't save them. Despite predicting that they'd sign up 5 million subs worldwide, they only signed up 2.7 million. Most important signs were particularly weak in areas where they raised prices, typically by 13 to 18%. I'm going to repeat that. Areas where they raised prices were particularly weak. Now, we've seen Netflix stumble before, especially maybe after a price hike, but not quite like this. In one fell swoop, Netflix went from easy money to hard money. In a single quarter, Wall Street went from sanguine to skeptical. So skeptical that the stock lost more than 10% of its value today. And for all I know, it could have more downside. Why? Well, I'll blame myself. I got it wrong. I believe Netflix was the ultimate bargain between the movies, the shows, the ability to binge. You can get a whole month of Netflix for less than the cost of a movie ticket. They throw in the candy, forget about it. So I figured people wouldn't blanch at a price increase. Yet that's exactly what happened here. We thought Netflix was the kind of company that could raise prices with impunity. If that's not the case, we need to take it out of the bin of consistency and put it in the bin of episodic and perhaps even, heaven forbid, dispensable. You see, until last night, Netflix was my go-to for entertainment, meaning I hadn't looked at my bill in years. I have no idea what I pay for Netflix. I mean, come on. I got my own funny picture up when they asked me who's watching. A few years ago, in preparation for interviewing the brilliant Reed Hastings, the CEO, I called customer service at Netflix at 2:30 a.m. to ask a question. I wanted to know what was my best bet for a movie about the Russians going from Stalingrad to Berlin to end the war in the East. And a very nice woman told me to watch a movie that was actually directed by Stalin. Wasn't bad. I mean, I will gladly double what I'm currently paying for Netflix, whatever the heck it is. But it turns out found out last time I'm not representative of the broader customer base. In other words, I no longer think that Netflix is like Costco or Amazon Prime or Spotify or Apple, all services people pay for without thinking about it. If it's not part of that club, you have to guess how many people are willing to shell out what they're paying. And if you have to guess, it's no longer easy money. It's hard. It's not just Netflix. I got another one. For the longest time, the easy money in big pharma was Johnson & Johnson. Best pipeline, best management, best balance sheet. Terrific growth in actual pharmaceuticals, not just a sales force. Suddenly, though, this one's become the hard money. You know, the other day, J&J reported an excellent quarter. Yet at the exact same time, there was a story about how the company might be on the hook for billions because of its role in the opioid epidemic. The authorities in Oklahoma went after J&J tooth and nail. Oh, by the way, but of course, 2 other companies for pushing these painkillers that can ruin lives. Now, the other companies were a lot worse than J&J. They wrote some checks. They settled. J&J sold far fewer opioids, and they did so responsibly. But they're trying to fight it out in court because they didn't do anything wrong. And the stock's getting killed for it. I think J&J absolutely is right to defend itself. They may have been on the hook for less than 1% of Oklahoma's opioid sales. We own it for my charitable trust, but it has been brutal. And this upcoming opioid verdict could be the tip of the iceberg in terms of litigation, including all the cases based on the allegations that J&J knowingly sold people talc that was loaded with asbestos, which again I think is wrong. I've read the pleadings. I've done the homework. I've interviewed the terrific CEO, Alex Gorski. Well, I believe the story he told right here on this set. There are new cases coming from all over, and it's become a dangerous whack-a-mole story. My Travel Trust sold some of it when it was trading in the 140s. I didn't want to. Now it's all the way back to 132. I don't want to buy more. I don't want to rebuild. Maybe wait till it goes to the 120s. Maybe a little more de-risked. In the end, the easy money in pharma right now is in Novartis, which reported a fantastic quarter, amazing guidance, best of all, no controversy. Let me give you two more examples. 2 days ago, CSX, big East Coast railroad, well, what did they do? They reported what I can handily have to tell you was a very disappointing quarter. And you know what? Why? Because the CEO seemed baffled by the weak economy and the stock got crushed. But then Lance Fritz, the CEO of Union Pacific, which is a West Coast railroad, came on our air this morning, and he didn't seem baffled at all. In fact, he was downright bullish. CSX is a train wreck of hard money. Union Pacific is all aboard with easy money. Now, maybe you think I'm being a chicken, that the real reward goes to the bold and the brave, the people who are willing to wade into Netflix right here and make a stand, the ones who decide that J&J will win all the cases, or that CSX has figured out what went wrong and things can turn around. That, my friends, is totally wrong. Through many years of experience, I can tell you that this kind of bravery rarely pays off. Sometimes things are as straightforward as they seem. Costco is now cheaper than Netflix because they can get away with raising the price of membership. Novartis is a better buy than J&J, even with the stock back to its all-time high and selling for 17 times next year's earnings. As for CSX versus Union Pacific, are you kidding me? Being a hero looks great in the movies, but it's a silly way to invest. If you really believe that Netflix has turned things around because of the first few weeks of the current quarter being good, well, good for you. I'd love to give Reed Hastings the benefit of the doubt. But between the price increases and all the content they're losing as competitors ramp up their own streaming services, it turns out that some people really do care about the price of Netflix. And when they raise price, people stop subscribing. This makes it a much less compelling story. Bottom line, some companies are so straightforwardly fabulous that they are easy money. Netflix used to be part of that club, but not anymore. I'm not saying it's a bad story. And maybe it's already making a comeback. But then again, maybe it's not. And that's why it's hard money. And I'd much rather chase easy money every day of the week than hard money ever. And it is that simple. Raphael in Florida. Raphael.
Good afternoon. Thanks for taking my call. My question is for Stitch Fix. It reported about 2 months ago pretty good numbers, but hasn't picked up yet.
Well, let's give it a chance. It's a young, unseasoned company, but I have to tell you, having met Katrina Lake, I am totally impressed. I think that they've got a good business going and that the stock is a buy right here. The quarter was good, by the way. Let's go to Scott in Florida. Scott.
Hey, Jim, how you doing?
Scott, I'm doing well, thank you.
All right. My question's on UNH. What's up with UNH? They beat on earnings.
I am furious about UNH.
For the rest of 2019, and they're still down $6 a share.
It was a great quarter, but then middle of the conference call, they dropped a bomb about a piece of business that made it so that you could not get the right estimates of what they did. So it looked like they boosted, but they didn't. And they did it in the middle of the call and reversed the stock, and it went down, and I'm getting tired of this. I'm getting tired of the inconsistency in United Health. My Travel Trust owns it, and I threw something today. I haven't thrown things in ages. I mean, I haven't thrown anything since Saturday. All right, take it easy. Remember that being a hero is a silly way to invest. It's okay to seek out easy money. On Mad Money tonight, Bank of America just hauled in a record first half profit. But will the looming rate cuts take a bite out of the stock in the longer term? I'm sitting down with the CEO to find out. Then, ever heard of a $34 billion bargain? I'm conducting an investigation to find out whether IBM overpaid for Red Hat or whether it was a good deal. And after reporting a top and bottom line miss this morning, I'm going to sit down with the CEO of Nucor, find out what's ahead for this great American steel company. So stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.